Hello everyone, this is the pre-market report video for today, May 29th in the Indian stock market in terms of Nifty and Bank Nifty. Last Friday, US market closed very positive by expecting the optimism around debt ceiling issue. And for the second consecutive day, both AI and semiconductor stocks were super positive. Thus, the semiconductor index increased 6.3%, taking the total gain in last Thursday and Friday to over 13%. Regarding the semiconductor positivity, we already discussed in detail in the last pre-market video itself, so I don't want to bore you guys by repeating the same information. Anyway, half of the Nasdaq is made up of semiconductor and AI stocks, thus indirectly again Nasdaq rallied. At the end of the day, Dow Jones ended its 5 straight day losing and closed positive of 1%. S&P 500 increased 1.3% and Nasdaq rallied by 2.3%, whereas VIX decreased over 7% and moved below 18. As usual, it's not all positive, there are negative as well, but market just ignored those negatives. For example, US Department of Commerce released the PC inflation data on Friday. As I said so many times in this channel, always Fed for taking the interest rate decision, they use the PC inflation data only, not the regular consumer inflation, especially the core PC inflation one. Basically, this is their favorite gauge. That PC inflation comes as 4.4% for April month, which was higher than the March month's 4.2%. In case of forecast, it was expected to have just 3.9%. Whereas about core PC inflation, it comes as 4.7% for April month against expectation of 4.6%. So the inflation issue is back and it is clear if you see the Fed rate monitoring tool. I mean, at present, near 65% of probability that Fed will increase 25 basis point of interest rate in the upcoming FOMC meeting in June 14th. On Thursday, this was less than 50%. On last Wednesday, around 35%. And on last Tuesday, it was just 15%. Which means last Tuesday, market was 85% very confident that Fed will not increase any interest rate in the upcoming FOMC meeting. 85% all the investors expected that Fed will pause the interest rate. Now that turned to near 65% probability they will increase. Clearly, this is not at all in favor of market. Luckily, dollar index and 10-year bond yield didn't increase. It was almost same as Thursday closing, 104 and 3.8 respectively. This is the second consecutive day US market just closed its eyes towards negative macro and was just very positive. Anyway, again regarding debt ceiling, finally on Saturday the deal was reached between US President and Republican Senate leader. Now they agreed to raise the US government debt limit to 31.4 trillion US dollars. In order to materialize the deal, according to Republican Party, US government agreed to lower the non-defense discretionary spending such as healthcare, student loan forgive and people benefits to the 2022 levels. Unlike last 2 years, 2-3 times they increased the debt ceiling. This time, this agreement will be valid until January 2025. Meaning the present ruling party kind of got the breather till 2024 US presidential election. Now, because of the spending cut, investors and investment analysts has to analyze where this will affect the GDP and economy. Basically, all the CFOs has to update their cash forecast to factor in the cost of this debt ceiling agreement and will try to project the impacts of spending cuts on their own organization's financial projections. However, one immediate benefit will be that this will make the treasury bond yield to return to normal and risk-free status. Anyway, it's almost the deal is done. Only it has to pass through the Congress and so the real catastrophic unknown crisis is kind of prevented. But the net impact is very ambiguous. Among investors, they are expecting only AI companies will have an uninterrupted growth and those will be unaffected by this spending cut. That's also the reason why in the last 2 days, AI companies in US had a huge rally, but investors were not bullish on banks. Moving on, coming to Indian areas, both banks and both IT stocks closed more positive than that of the Indian market. We may expect that positivity might carry in the Indian market today. Regarding SGX Nifty, on Saturday morning it closed at 18,632. At present, it's difficult to calculate the premium accurately, but based on the data, we might expect 40 to 70 points gap up opening. So, those were the things that happened on the global market during weekend. Now let's move to the next topic. There are 3 things it's very important we need to look out or keep tab on for this upcoming week. First, Indian GDP data, which is due to release on coming Wednesday for the last quarter and also for the whole year. At present, the expectation is that Indian economy to grow at 7%. Second, again the debt ceiling. This time by June 5th, the agreed deal has to pass to the Congress. If the deal fails to make its way, then again it will be a big negative for the market. Finally, US non-farm jobs data. This is very important, especially now since the PC inflation is not in favor of the market. The next interest rate impact one is the jobs data. To be frank, there are other important items as well. PMI data, auto sales, Chinese PMI and Europe inflation. But the discussed three items are the very important one. Then about the quarterly results, Mahindra & Mahindra, Sun Pharma, ONGC, Engineers India and BHEL released their earnings. In that, only Sun Pharma and Engineers India posted the better results. Sun Pharma did beat the analyst expectation, all others didn't. Especially ONGC and Mahindra & Mahindra. ONGC posted a loss of 250 crore rupees and its revenue fell by near 6%. In case of Mahindra & Mahindra, their net profit increased by 22% to near 1550 crore rupees, but analysts were expecting the profit to around 1600 to 1950 crore rupees. So they posted the lower profit than that of the lower band. In case of steel sector, European Union agreed to have a discussion with India regarding this new carbon tax. They said if this new carbon tax causes the undesirable results, then they will correct those. Just for info, they announced this now since India said that they are going to raise this as a complaint in WTO, World Trade Organization. In addition, as per Reuters, India's steel demand is to increase 7.5% this year. So overall, all very positive for steel stocks. So let's see how it will react today. Finally, during weekend, Indian Meteorological Department released their forecast report that India will have a normal monsoon this year despite the El Nino in Pacific. If required, please pause and have a look. This is the history of Indian Meteorological Department's forecast versus how actual the monsoon was. For those who don't know, every year monsoon starts from June 1st in Kerala and retreat by September. So those 3 months are the monsoon period in India. As a summary, global momentum is very positive. ADR closed more positive than Indian market and SS Nifty indicating at least 40 to 70 points gap up opening. Even at present, early morning, US future market is trading around 0.5% positive. About the things to look out, Indian Railway Catering, Adani Transmission, Force Motors, KNR Construction, Natco Pharma and NHPC are some of the major Indian companies' earnings results are scheduled to release today. Just for info, today US market and UK market is on holiday and there is no important macro that I am aware of that we need to keep an eye out for. Before going to technical, I forgot to mention about institutional activity for the 5th consecutive session, which means whole last week both FII and DII were net buyers. Last Friday, FII's net bought for near 350 crore rupees while DII net bought for over 1800 crore rupees. Coming to technical, if we consider the last 3 days, first one was the red candle, then the second one is the bullish engulfing one, the following third one is the green candle which closes above the second candle. Thus, Nifty forms a 3 outside up formation but with very weak volume. Here the third candle is the confirmation of bullishness continuation and this formation is formed by breaking out the resistance zone 18,400. So the most probable scenario is that Nifty will move towards 18,600. The short-term trend is positive. As long as Nifty trades above 18,400, it's positive. But if it slips below 18,350, then it's kind of trend reversal. The hourly momentum indicator has a positive crossover and the daily momentum indicator is on the verge of giving a positive crossover. Thus, both price and momentum indicator suggest that the positive momentum is likely to continue. In case of Bank Nifty, it has managed consistently to close above its 10-day moving average even when Nifty closed below its 10-day moving average for a couple of trading sessions. However, Bank Nifty is yet to cross its immediate hurdle all-time high value 44,160 whereas Nifty has closed well above its hurdle. If the breakout happens today, then there will be a strong possible that Bank Nifty might move towards 45,000. Moving on, for Nifty, based on change in open interest, some call options were unwound between 18,200 to 18,400 and between 18,000 to 18,400, more number of new put options were added. The new maximum put option addition is at 18,400 and thus it is the immediate support to look out. Similarly, if you see the overall options open interest data, 18,300 is the next nearby maximum put option open interest after 18,400. So 18,300 is the support to look out for in the expiry. On the higher side, 18,500 got the significant short straddle, then 18,700 got the maximum call option open interest and followed by 18,600. Thus 18,600 is the immediate resistance and 18,700 is the strong resistance. In case of Bank Nifty, from overall options open interest data, there is no change in story compared to last Friday. 44,000 got the huge short straddle, then 43,500 got the maximum nearby put option open interest, followed by 43,000. Hence, 43,500 is the immediate support and 43,000 is the strong support for the expiry. Whereas, 44,500 is the resistance to break. So, that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.